Hi, welcome to the Market Alert for Tuesday the 4th of April 2017. Yesterday's activity, well, let's have a look at it in real time. The market started off obviously at 2:30. They're waiting for the manufacturing figures to come out of the US, which they did, and they were more or less the same. Well, they were exactly the same as before, and the market there obviously waiting as it's sort of sideways in a range, and then eventually we see the market fill the sell side. There you go, you see it there just on the news. And as I've said before, manufacturing figures or consumer spending, all that sort of thing is not a problem to be in the market. You just don't want to be in with high impact news items like the FOMC minutes, which we've got tomorrow evening, and interest rate decisions, Fed speakers, the big ones, the big guns, not the Dudleys or Kaplans, but certainly anybody that's a major, well, the Fed chair, Bank of England governor, or Draghi, although Draghi doesn't seem to affect the market as much as he used to when he spoke, or when he speaks, I should say. So see the markets moving sideways there, and eventually we're off to the races. And we see it go through the scalp. Now you'll see the market is driving through the scalp and also the psychological level there as well. And this is the cue to start actually trailing the stop if you wish to do so. So let's just move on and see what happens. And I'm going to highlight something for you that happened twice yesterday, and I've spoken about this before in the market alerts. So what I've done now is remove the scalp, the initial risk, which was above this bar, and move the stop to break even just to see what happens, and then just give it a chance to play out. So there we see the market continuing to move lower, and this is the bar you want to actually watch, this one, the current bar, and keep an eye on the volume as well. So as the time passes, you'll see the volume growing there, and this is important because you've got the same, if not more, volume in this bar as you had in this bar, which says to me that if the volume is greater in this bar and the range is narrower, as it is here compared to here to here, you can see that it's far narrower, then we must have some buying in the market. Now at this point you can make the decision if you want to come out or not. I didn't make that decision, as you'll see. I thought I'll just see what happens, and then I put the stop in 50% above the high of this bar, which happens to take it to the same place as the scalp. I was hoping we were going to get the start of a decent sell-off, but it wasn't to be the case, and the trade was stopped out. There you see it removed from the chart. We then had a potential buy signal. This wasn't filled, followed by another sell signal. So hopefully this time we'll see prices move to the downside. And again, you're seeing the same thing here, the market driving through and heading towards the 20,600, I think that one is. Very difficult to see on this screen. It is indeed. So once again, same thing, the market moving lower. And there we go through the scalp, sorry, not the scalp, the psychological level, and once again you'll see prices moving lower. And also again, just look at this price bar. What happens is the market comes off the low and the volume is greater. So once you've gone through that 20-point scalp, watch for this type of activity. It is a repeatable pattern. I've spoken about it for a long time. So now I've moved the stop, and again watch what happens here. You can see the volume coming back, and there you see prices taken out again. So you get this big spike in the volume, comes off the lows, and then you see the market reverse and move back to the upside there with 52 points of profit on this trade to go with the 20 points off the first part of the session. So then the market just trades sideways And again, here's another one for you. You have a look here, you'll see in this bar the market drops down, and watch the volume again. You've got huge volume, market coming off the lows. Looks exactly the same as this one, and this one not as pronounced, stays in the bottom quarter, but you'll notice these big spikes. And what this is showing you is how they're buying the market back and bringing it back, so that it wrong foots people. They're just buying the shorts is basically what they're doing, or short covering. And then you'll see the market trade sideways, and then later on into the evening we had a sell signal. The market moving sideways but didn't want to go down. We've already had the market being bought back here, which we have already talked about, and then we'll see prices trading sideways. It comes back down towards the entry price, fails to hold. We then get a buy signal, which is cancelled, and then we get a big spike to the upside there, taking the trade out with a loss. And then you'll see the plunge protection team come in and drive the market back to the upside just before we head towards the close there. And then we've got a sell signal just before we get into the zone where you don't really want to be trading. So an interesting session there. Certainly profits to be made yesterday, but an interesting sort of price action there. And again, they're still desperate to bring this market back to the upside. So let's have a look and see where we are in the bigger picture. This is yesterday's activity. The volume isn't that great. It's certainly improved from Friday, but market obviously struggling at the moment and heading back towards the downside there. So a retest of 20,527 will be interesting, and also again, it's just to make a few adjustments here. We're certainly starting to see a trend towards the downside. The average has also switched to red. The price bars now, if they come back up, are going to bang their head against this as well. You can see how we took it out here, and ever since then the prices have remained below. So we're certainly seeing some selling pressure on the downside, there's no doubts about that, but they keep bringing the market back. Notice also in here that we've got each day, each high is less than the previous days as well, so there's sort of this rounding over effect that's coming into the market as well. News wise today, what have we got? Let's just move forward a bit. The only thing we've got is factory orders. And speaking of the man himself, Draghi speaks at 3:30. Don't forget, tomorrow you've got the FOMC minutes as well. So today, Tuesday, can be quiet. Said that every Tuesday. So be warned. Draghi speaking at 3:30. So don't expect much in the first half hour, unless something major happens somewhere for the market to sell off. Otherwise, the market's going to be waiting for Super Mario to actually speak. Right, let's have a look at the implied volatility. And on the implied volatility front, we can see that we've got an increase on Friday to 959, 937 before, and that's because of the weakness we had in the market there. And one more thing before we finish, let me just unfreeze the screen so I can show you this. Notice this also, that Zero Hedge, an article yesterday, let me just find the right highlighter. We got insider selling hit 6-year highs as retail investors rushed into stocks. What I've said all the time, said this for the last 25 years, that the people, the retail buyers, the Trump voters are the ones who are driving the market higher, because it's allowing the big sellers to get out, the corporates to get out. And there you can see corporate insiders have been selling at the fastest pace in 6 years. Insiders unloaded 9.9 billion, 500 million daily in February, and 9.7 billion, 450 million daily in March. So let's have a quick look at the monthly charts of the Dow. this is where we get the real volume figures in the end of day, and here you can see precisely that. And in fact, you'll see that the volume is greater than it was in February. So it sort of backs up what has been saying in that article, and I've said this since December, where we've seen this major increase in volume compared to the rest of the years that we've had QE and everything else. There's not really been any buying, it's just been a bubble that's been artificially blown up by the Fed, and that all started here we're on in March 2009. So now you're starting to see that same sort of level of volume that we had there, but this is different in that it is consistent. I thought this may have tapered off, and I had got it wrong, that we could be actually seeing some new buying coming in and moving the Dow higher, but at the moment it seems to be what also again is reported there with Zero Hedge, that there is some selling taking place by the corporates, and that's now confirmed as well in the figures and reports. If you want to drill down into the article, will actually see that. Right, that's it for me for today. I'll report in if there's anything, but keep in mind Super Mario is speaking at 3:30. That's after the first hour of trading. If there are any trades in the first hour, I would take the profits off the table, unless again something of a geopolitical nature comes into the market to move prices lower or higher as well. But trading range till FOMC tomorrow night without a doubt, and non-farm payrolls on Friday as well. So keep bagging the profits, as the market is still only reacting to the sort of US economic news items at the moment, although there is a sense that the wheels are going to come off this at some point, but of course we don't know the time and date. But there are signs there, certainly, especially within the chart that you have on the screen there now. Right, that's it. I will see you in tomorrow's market alert. As ever, thanks for watching. See you in the next one.